Hi everyone, before I start the analysis, I have an important announcement as on the 24th of February, I have a meeting in the US with Robert Prechter. He is the founder of Elliott Wave International and the author of the legendary Elliott Wave book, The Elliott Wave Principle. My wife and I will fly to the US on the 20th of February and we will return on the 6th of March. So the content in that period is going to be limited. Now, if you have any questions for the man himself, please write your question in the comment section below as I will handpick certain questions and we can possibly do a vote as well to see what question gets the highest amount of votes. I will then ask certain community questions to Robert Prechter himself. I'm not yet sure if I am going to record the conversation. I also don't have the equipment for it, but that is something that I will think about in the upcoming days. Now let's then start with the analysis. In this video, I will provide you with an analysis on the 4-hour and the 1-hour time frame. We're starting with the higher probability scenarios, and then we get to a couple of 1-hour alternative scenarios. As we have covered the 1-hour and the 4-hour time frame in recent videos, it will be quite a short analysis. So on the 4-hour time frame, nothing really changed. The highest probability scenario is that we are still looking for a wave 5. In this particular scenario, we would be looking for a longer sideways range, preferably to finish after at least the 18th of February before eventually seeing a wave 5 to the upside, which then is a nice 5-wave impulsive structure to new all-time highs. And the other scenario, which is quite similar but a little bit different because in this case here, wave 3 ends at this particular high. In the previous scenario, it ends over here, the red one. And here we then have a wave 4 that is either finished at the low or we look for a triangle A, B, C, D, E and then price to move up. You can see the polyline price action relatively similar. You basically want to take out this high. Invalidation is the low. Then you look for a retracement, some interesting resistance around 104.7K, 105K would be a nice area to have a retracement. And then for the most bullish scenario, 1, 2, 1, 2 continuation or the triangle and then wave 5 up. In both cases, you're still looking for a wave 5. It is the highest probability scenario on the 4-hour time frame. If we then jump to the 1-hour time frame, then the highest probability scenario here is what you see on the chart. So an impulsive structure to the upside in a wave A, 3-wave corrective structure in a B and then C to the upside. Alternatively, this can then be counted as a wave 1, 2, 1, 2, 3 or 1, 2, 3 up. The weekend is coming up, however, commonly during the weekend you have a ranging structure and also this structure over here is very long in time now compared to wave A, which gives higher probabilities to it being a wave B compared to a wave 2. If you take a fib time from the start to the end of wave A, right, and toggle on the different fib times, you can see that so far this range is over 4 times longer compared to wave A. Now, time is never an invalidation, but it is more common for a wave B to be long in time instead of a wave 1. Now, this wave B in this scenario is then a double zigzag structure. So ABC in a wave W here, then we have wave X and another zigzag down ABC in a wave Y. Now, if wave B in white here can move to the upside just a little bit more, then it can touch the daily naked point of control at 98.1K. Interesting local resistance. And if price does move up here, then the common target for your wave C, being the 1 to the 1.236 trend-based fib extension taken from the start to the end of white A to the end of white B, then around the daily naked point of control, this target area is then in confluence with the point of control here at 93.9K, which is of course quite interesting. We also have some support here, 95.3K. Now after that low, you then want to see price moving towards the upside. And of course, during the weekend, basically what we want to see is a move up and then a bit of a range during the weekend and then continuation next week. What's also interesting is the target for your wave C. So you can see the most common target for C being the 1-to-1 here on my chart. And this one is taken from the start to the end of wave A to the potential end of your wave B here around this point of control at 93.9K. Now you can then see that the common target for a wave C is in confluence with the daily and the monthly naked point of control. And that is the resistance I was talking about earlier, 104.7K to 105K. So that is brilliant confluence from an Elliott wave point of view with some of the volume levels. Very attractive area for a potential retracement again. Now, if you then look at some alternative scenarios, then the first alternative scenario here would be a 5-wave A, W, X, Y in a B, and then a C to the downside. So in this case, we still look for price to move to the downside. We still have not touched this blue box, which I've been talking about for a while already, because price just seems to love to range just above the blue box. So it's still the highest probability scenario to actually touch it at least. But in this scenario, you then have a WXY inside B, which is a running flat. Then you have your wave X, which is a flat, and then you want a zigzag structure in a wave Y, or possibly a triangle, but you do have a double top over here at about 99.2. The reason the probabilities are lower for this scenario is due to wave B already being over 6 times longer than your wave A, which lowers the probabilities. And also, this wave W is a running flat. 3-wave A, 3-wave B, 5-wave C. And a running flat is quite simply a rare structure. Now then, the second alternative scenario, zigzag in W, complex structure in wave X, and then you look for a wave Y to the downside. Now, in this case, your wave X is quite simply not yet finished, so wave W is counted as some sort of a zigzag structure. It can't be a flat in this case, so this would then be a zigzag. This counts best as a 5-wave move to the downside, which is the reason, by the way, that this W sits over here and not here, right? So I can't count A, B, C like a flat, for example, call this a W, and then call this an X, because this is very 5-wavy, and X can't be a 5-wave structure. In that case, you would then look for an X like this, and then you get your wave Y, but then you're going to take the low and hit the box anyway, which is, of course, what we're looking for. So W, X, and then wave Y. Wave Y in this scenario, because W is counted as a zigzag, can only be a triangle structure, the purple pink line here, or then a flat A, B, C, and then move back down again. And then finally, the most bullish scenario, also an alternative scenario, is zigzag W, zigzag X, a flat in a wave Y, a sideways WXY combo. The reason why the probabilities are lower for this scenario has to do with the retracement of your wave X. You can see the 0.382 here on my chart, taken from the start to the end of W. The 0.382 is a very uncommon target for a wave X in a sideways WXY. Now there's a big difference. You have a sideways WXY, and you also have a sharp WXY. A sharp WXY is a double zigzag, meaning 535, correction 535. In this case, your wave X preferably retraces to the 0.236 to maximum the golden pocket, right? The 0.7 would significantly lower probabilities for a double zigzag, so that would be your absolute maximum target for a wave X in a double zigzag structure. In a sideways WXY, your wave X preferably retraces to at least the golden pocket, if not higher, to create a nice sideways movement. And that is clearly not the case in this scenario, as your wave X here only retraced to the 382, which gives higher probabilities to a double zigzag than a sideways structure. And this would be a finished sideways structure, because your wave W and your wave Y are different. W zigzag and a flat structure in a wave Y. So this is what impacts the probabilities. And a small little side note, that if bullish, you can see, okay, we have a move up. This does seem very ABC-ish, by the way, with a wick here above the high. So A, whatever B, and then 1, 2, 3, 4, 5 in a C. But also, if this would be a finished corrective structure, and this is another wave 1 and a 2, and then you look for 3, 4, 5, your 2 here touch the 886, which is very rare for an impulsive structure. So preferably, you're then not even finished correcting. You still look for a bigger corrective structure. So yeah, it's not the highest probability scenario. Now we do have some news this afternoon. I will be live on YouTube during the news, as volatility is expected here. Friday, 2:30 p.m. Central European Time and also 4 p.m. Central European Time. I will make sure to boot up the live stream at 2:30 p.m. Make sure you trade safe, again, as volatility is expected. And if we then look at the probabilities and also the polylines, then the polylines basically show you the highest probability movement of price. So on the daily, which is basically the 4-hour time frame I'm on at the moment, the highest probability scenario is what you see on the chart. Basically, we're still looking for a continuation of the range anyway, according to red or blue, but the result is the same, and that's most important. That is the bias on the higher time frames. And on the 1-hour time frame, you can see the polylines here on the chart. And quite simply, you can also see here that the probabilities on, well, I say the 1-hour time frame, but actually on the 1-hour time frame, probabilities are highest to take out the high here, right? So that's why I write bullish, probabilities highest to take the high, impulsive correction, looking for another move. But on the 15, which is what's happening here, the probabilities are still higher to take out this low and touch the support that we have to the downside. You can see here, according to the polylines as well, only the blue line, which is the bullish scenario, basically moves towards the upside, and that's your finished structure. All the other polylines are still looking for another low and price to hit the box below. So that is then also the highest probabilities locally. On the 1-hour, still looking for price to take out the high, right? And on the 4-hour daily time frame, also still bullish. So I hope that this video was helpful or valuable to you. Please check out the CVD indicator video, the best indicator out there in my opinion, or the Elliott Wave educational playlist to help you understand more about Elliott Waves. Thanks for watching and subscribing, and I hope to see you at the next one. Bye bye.